please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The company on our radar right now is India Glycols, which has in fact gained almost around 50% just in the last 1 month. And if you look at it on a year-to-date basis, this entire year, that stock has gained around 140%. So very strong outperformance that we've seen from this particular company. To understand what's happening, we are now joined by Rakesh Bhartia, the CEO of the company, who's with us. Rakesh, hi. Thank you very much for joining in. Just wanted to start with talking about, this proposal that you all have in order to dispose the company's investment in its subsidiary, which is in the sugar business. Can you just take us through that? Because as far as I understand that you had pretty much scaled down your operations in the sugar business, maybe say a year and a half ago.
So we had actually wound up our operations in the sugar business about 2.5, 3 years back. And we were in the process of settling all the liabilities. Having done that, we are now looking at options, as we've indicated to the exchange, of looking for either partners or a complete divestiture, be it piecemeal or as a whole, to anybody who's willing.
So what are the assets that you're looking to dispose of, if that's the case?
So we have a sugar mill with a capacity of 5,500 tons per day and a distillery of 60 kiloliters per day of production. And there is a cogen plant, which is principally used for captive consumption. So that's the asset that we've put out on sale. And
which is not functioning right now, and the value of that?
It's not functional. And as far as the asset value goes, the asset value is significantly higher, though since it's not being core and the fact that we've not been running it, I think we would look for a reasonable value for which to divest.
Right. Mr. Bhartia, could you tell us if the business is looking, how is business doing? I mean, has profitability improved? Have volumes improved dramatically? I mean, what has really changed? Because I think we prefaced our commentary before we came to you with what the stock has done. It's just been phenomenal. Could you tell us if the business change has also been phenomenal?
So as far as the business goes, the current year is definitely going to be much better, both in terms of volume and value relative to last year. And one of the principal reasons for that being just better realizations, better outlook on prices for one of our principal products, which is monoethylene glycols. So I can say that business outlook is definitely much better this year relative to last year.
So how much better? I mean, so what was 17 EPS growth over 16? What would 18 be over 17?
Now,
approximately.
I wouldn't comment on what the earnings per share growth could be. But if I were to just indicate in terms of volume growth, I think in the first half itself, we should have a year-to-date volume growth in one of our product verticals of about 35 to 40%. And I see reasonably good volume growth in our specialty chemical segment. So let's put it this way, I'm reasonably satisfied with the business outlook so far and even going forward.
Okay.
Monoethylene glycol, which you said is one of your primary products, volume-wise, what is the percentage of your business?
Year-to-date or rather year-on-year growth should be about...
No, not growth. Is it, I mean, what percentage of your revenues come from that product?
About 30 to 35%.
And the rest is in the specialty segment?
No, we have various other verticals. So we have potable alcohol, we have industrial gases. So the biggest segment for us is specialty chemicals, which is about 40 to 45%. And MEG would be about 30-odd%.
Okay. Rakesh, just before we let you go, you said reasonable value for your assets in the sugar business. What would a range be at least, or up to, that you're looking at?
The minute I indicate that, any potential buyer who must be hearing me speak will think that's the max that I would expect. So I'm not going to indicate a number.
So you've not yet started negotiations on it as of now?
No, so we have started the process and we have a couple of interested parties, but I would refrain from indicating a number at this point in time.
Okay, fair enough, Rakesh. We'll let you go on that note. Thanks very much for joining in and speaking with us. So that is India Glycols, that they are looking to at least sell off their sugar assets at this point in time. But
okay, we're still 60, 65 points off the highs. There's 1 point on the Nifty, so nothing at all. And it's all, by the way, happened in the last 35 minutes to be precise. This big sell-off that we are faced with. It's earnings season, and we, as always, get you perspective on what to expect. We spoke with market experts and their expectations from the season. Listen in to a couple of them.
If you consider the non-bank and non-oil sector, the earnings growth that we are sort of looking at is close to 9.5%, a top line growth of something like 10.2%. EBITDA is growing at something close to 10%. On the one side, you have a sort of a demand stimulus led by larger government spending. You also would have a scenario where margins will be under pressure because of the increase in raw material prices. So I think in this quarter, since you have a dislocation relating to GST, an inventory built up, inventory run down, all those things have happened. So I don't think this quarter will necessarily replicate or sort of symbolize what will be the trend going forward.
What we are looking at is an IDFC universe growth of about 9% for the whole year, which is about 3% growth for the first half and about 12% growth for the second half. But having said that, this quarter in particular, we will be seeing a 6% growth in Nifty estimates and about a 4% growth in the IDFC universe estimates. Now, having said this, it always masks, these aggregates always mask the outliers and always mask the performing and the non-performing stocks. The commodity-based space is where you will see more upsides, and with the commodity prices staying firm, you will continue to see more upsides in the stocks also relating to this space.